One of the most requested features from our users is a screener that can find the highest rated stocks on Stock Unlock. We are answering this request by building a very powerful screener that will screen over 130,000 stocks from all over the world and find the highest rated stocks with the strongest fundamentals. The screener is still being developed and it is in its very early stages, but I have had the opportunity to play around with it and I have already found a handful of very interesting stocks. In this video, I am going to quickly go over 5 of them and show you why I think that they are interesting and kind of dive into them a little bit deeper. I also made a public watch list of all the stocks I found so far, and I will put a link in the description if you want to go see all of them for yourself. There are 16 so far, and again, all of them are highly rated on Stock Unlock. So with that being said, let's now just hop over to Stock Unlock, and let's start taking a look at the 5 stocks that I have found that I personally think look very interesting. So this first one right here is QLYS, or QLYS Inc. I think I'm saying that right at least. This is a cybersecurity company, and full disclosure, I have not done a deep research into the actual businesses that we're going to be taking a look at. I am just taking a look at their numbers and their fundamentals so far to try and find some stocks that look fundamentally sound and maybe selling at a discount right now. Keep that in mind, and this is just very much so a watch list and some research ideas that you guys can maybe add to your own watch list and research on your own. So right away, what I want to do is compare QLYS to the S&P 500. And we can see that since 2012, when the company did its IPO, it's now up over 900% versus the S&P 500's 152%. So this stock has massively outperformed the S&P 500. It's also got a market cap of about 5.6 billion. So it's not a very large cap stock. I would say that this is more like a mid cap stock. Now, we've also talked about the cybersecurity space here on Stock Unlock on this YouTube channel before. This is just an industry that is growing incredibly quickly. Like every single cybersecurity stock that I find is growing super quick. The fundamentals of the business is growing super quick as well, but they tend to carry very high price ratios and expensive price tags. If we take a look, this stock is no exception. It's trading for a price to free cash flow now of 31.2, and it's got a free cash flow yield of about 3.2%. Now, why I say that this is expensive is because the 10-year bond right now, government bonds, are yielding more than 3.2%. So basically, investors could go and buy a government bond and they would be getting a higher yield on their money than a free cash flow yield of only 3.2%. Now, the next thing that I want to do really quickly is show you guys the fundamentals of QLYS though, because take a look at this revenue growth since 2012. This is honestly a thing of beauty. This is the trailing 12 months revenue growth, and take a look at the quarterly revenue growth. It's literally every single quarter this business's revenue grows and the business expands. Back in 2012, they were doing about $21 million in revenue per quarter, and now they're doing about 120 million. So they have 6x revenue over the past decade, in the past 10 years. Now, if we also take a look at the company's cash flow and we take a look at the trailing 12 months, the cash flows have been growing as well. It looks like the cash flows are kind of being stagnant right now, but overall the cash flows have grown quite significantly. It looks like by about 10x over the past 10 years. This company also likes to buy back shares. We can see right here that the net common stock issued is going down. So the company is using cash flow to buy back shares, which is helping put upward pressure on the share price. Now, if we head over to the balance sheet, we can see that this company has total cash of $420 million, okay? And if we scroll down, they have liabilities of 392 million. So this company, by taking a look at their balance sheet really quick, they have more cash than total liabilities. So they're in a very financially sound position as well. If we quickly head over to Stock Unlock Insights, we can also see that this is a very profitable business with a profitability score of 4.6. It's growing quite strong. It looks like the revenue has increased by 16% over the past year. Net income, gross profits are increasing as well. If we take a look at the financial health, it's got a 4.4, and right here we can see that it does have more cash than total liabilities, which is very good. Also, you can see that the company bought back about 1% of its shares over the past year. So the fundamentals of this business look very sound. However, if we head over to our freeform tool and we take a look at the past 5 years over to 2017, we can see that this stock's average price to free cash flow has been about 30, okay? Right now, the stock is selling for a price to free cash flow of 31.4, so it is selling slightly above its 5-year historical average. And we can also see that this stock likes to go down to a price to free cash flow in the 20 to 22 range. And in my opinion, if I were looking to buy this stock, I would love to buy it around a 20 price to free cash flow. And we can see once again that the stock does historically fall down to around that 20 price to free cash flow price range occasionally. Back here in 2017, it was 22. Back here in 2020, it was 21. And then back here in May of 2022, it was about 23. So if this stock's price to free cash flow does come down, then it could be a very interesting business. Now, let's move on to the next stock. This one is PAYC or Paycom Software. I believe that this business is in the digital payments industry, and it is a larger business with a market cap of over 20 billion. So this is not very much so like a mid-cap business anymore. We're getting into the larger cap businesses. However, if we compare this stock to the SPY, we can see that since 2014, this stock is up 2,100% versus the SPY's 100%. So it has massively outperformed the S&P 500 over the past 8 years. If we go and take a look at this stock's financials as well, let's take a look at the revenue, and let's take a look at the trailing 12 months revenue. And we can see that over the past decade, this is the exact same story as the other stock. But this company has grown its revenue from 77 million to 1.2 billion over the past decade. So it's grown its revenue by, that's almost 20x. Almost 20x. It's probably like 15 to 16x revenue over the past decade. If we take a look at cash flows, we can see that the cash flows are also growing super well, and this company is very profitable, and it's also buying back shares. And in the trailing 12 months, it's bought back about $100 million worth of shares. Let's go and take a quick look at the balance sheet. And by the way, I haven't taken a look at this company's balance sheet yet. So we can see that they have cash of about $280 million, and they have liabilities of about 3.9 billion, and they have current liabilities of about 3.6 billion. Now let's take a look. Total current assets are about 3.8 billion. So the company's current ratio is slightly above 1, but they do have a lot more debt than the previous company that we just took a look at. If we actually take a look at this company's tangible book value, we can see that it is about $886 million, and the tangible book value is growing. So the company is growing its assets more than its liabilities, but it does have quite a bit of liabilities. If we head over to Stock Unlock Insights, we can see that the financial health is still a 4.3 out of 5. The current ratio is above 1, as we just saw. The debt to EBITDA ratio is very low. They don't have a lot of intangible assets, and they are buying back shares. The company is growing incredibly strong, though, with that growth score of 5.0. Book value, free cash flow, gross profit, net income, operating cash flow, operating income, revenue, and tangible book value are all increasing by over 20%. So this is very much so a growth stock. This is like a hyper growth stock with that 5.0 growth score. So ultimately, this looks like a pretty financially sound business that is profitable and growing incredibly quickly. But here's the thing. Let's go and take a look at the freeform tool, and let's take a look at this business's price ratios and how expensive it actually is. So we're going to zoom out to about 2017 as well. And the company is selling for a price to free cash flow right now of 99.6, okay? That is very, very expensive. The average price to free cash flow over the past 5 years has also been 106. So the market is valuing this stock incredibly high, in my opinion. Even the price to EBITDA is about 54 right now. So yes, this business is growing super well. It's got really good fundamentals. It's got really good financials, but the price of this business, in my opinion, is just way too high. But fundamentally, again, PAYC looks very, very sound. So definitely a stock to watch. Maybe add it to your watch list, do some more research, and maybe find a valuation that you would be happy to pay for this business, because it's killing the SPY and it's got killer fundamentals. Now, the next stock we're going to take a look at here is NSA, National Storage Affiliate Trust. And I'm the only one on Stock Unlock who has found this business. So it looks like our screener that we built is so far finding stocks that other people don't even know about. So this one is in the real estate industry. And why it's so interesting is because it's in the public storage real estate industry. Now, when you think about public storage, it's a very boring industry, right? Like, you don't even really think about public storage that often, unless you're someone who uses public storage. But surprisingly, the public storage market and industry, especially in the real estate industry, is like freaking booming in North America right now. It doesn't even make sense to me. I haven't done a ton of research on it, but all I know is every stock that I find in the public storage industry is ridiculous. Like, it's growing so quickly. So the first thing I want to do is compare this stock's return versus the SPY since about 2015. And we can see that once again, this stock is massively outperforming the SPY. It's up about 220% versus the SPY's 70% over the past about 7 years. On top of the stock absolutely destroying the SPY's returns, It pays a 5.2% dividend right now. So this is also a very high dividend paying company. Let's actually go and take a look at our dividends tab really quick. And I want to take a look at the stock's total returns, including its dividend payments since 2015. And when we include the dividend payments, it's up about 300% versus just the stock price return of 223%. So when we factor in this company's dividends, it adds in about another 80% returns to its overall returns. Also, while we're here, we can see that the dividend per share has been increasing since about 2016. And in recently, since about 2021, the dividend per share has really been growing quickly. It's really started accelerating. The 5-year dividend compounded annual growth rate on this business is about 15%. So over the past 5 years, on average, every single year, they've increased the dividend by about 15% as well. But now let's head over to this company's financials. Let's take a look at the revenue. So we can see that the revenue is growing quite strong. The revenue has about 18x'd over the past decade, so really strong revenue growth. But the revenue has really started taking off since the first quarter of 2021, and it's gone up quite dramatically. You can see a clear trend change here. Let's take a look at the trailing 12 months, and again, we can see a clear trend change and acceleration to the revenue growth in 2021. So let's see if that's translating into cash flow growth. And it is. This company's operating cash flow is growing as well. So this is another really interesting business. Let's take a look at our freeform tool really quickly. And when I take a look at real estate companies or REITs, I like to use the price to operating cash flow. It seems to be the most consistent metric. And right now, this company's price to operating cash flow is about 13.1. Over the past 5 years, the average has been about 11.84. So it is selling slightly above its historical average price to operating cash flow. But we also saw that the business's growth is accelerating right now. So when a business's growth accelerates, the market tends to price that business higher, which could be why the price ratio is expanding right now. And a 13 price to operating cash flow honestly doesn't look that bad to me. Real estate stocks have been absolutely destroyed in the market this year because interest rates are rising, and it doesn't seem like a lot of people want to own real estate right now because the real estate market is slowing down. But that could be presenting an opportunity for long-term investors. Who knows though? But this is definitely an interesting stock with a very high insight score on Stock Unlock. Now, the next stock we got to talk about IPO'd in 2020. If we compare the returns to the SPY, I didn't think that the stock would be beating the SPY, but it is slightly beating the SPY. It's up about 15% now versus the SPY's 14%. But it's been a very volatile stock because it IPO'd last year, and IPO'd stocks were just crazy. I mean, like IPOs were almost in a bubble over the past 2 years. Now, this stock is a smaller market cap company, okay? They're also in the technology industry. I believe this company does some sort of software it provides software to legal companies. Essentially, lawyers use this company's software. And this company also acquires other software businesses. So if you've ever heard me talk about Constellation Software, this company is similar to Constellation Software because it takes its cash flow and it acquires other software companies, and that's how it grows. Anyways, this is a smaller market cap company with that market cap of $1.15 billion. So let's head over to the financials now, and let's take a look at the company's quarterly revenue. And since it just IPO'd, we don't have a lot of historical data here, okay? But we can see that the revenue is uptrending, and in the most recent quarter, they did set in a record amount of revenue. If we take a look at the trailing 12 months revenue, we can also see that it's growing and quite quickly. In the second quarter of 2020, the company did trailing 12 months revenue of only $31 million. And now the company is doing revenue of about $475 million. So they have like more than 10x revenue in 2 years. It's growing incredibly quickly, okay? But now let's go and take a look at the operating cash flow. And in the trailing 12 months, this company has produced about $185 million in operating cash flow. So it is producing profits from its operations as well. Now, when I was initially taking a look at this business, what I did notice though is that the company's liabilities are going up quite dramatically. I mean, back here in 2020, they had $221 million worth of liabilities. Now the company is sitting on about 1.5 billion. So it looks like to continue acquiring businesses at the speed that they're acquiring them, they are taking on a lot of debt. And this is probably resulting in negative tangible book value, which is exactly what we're seeing right here. Negative $1.2 billion in tangible book value. So let's quickly go and take a look at our insights actually. It's a very profitable business. It's growing really strong. But again, we can see right here the financial health is 2.2. It's got a lot of debt. It does have more cash than current liabilities, but it does have negative tangible book value, and intangibles are a large part of the total assets. And that's what I mean is this company is acquiring, so it's taking on a lot of goodwill and it's taking on a lot of debt, which is lowering the tangible book value. So that is why the score here is not higher, but overall the stock still is scored 3.78, which is not that bad. Now, what's interesting about this stock though, again, is think about this. It's got that $1.15 billion market cap. And if we go to the cash flow in the trailing 12 months, it's produced about $161 million in cash flow. What this means is that this business is selling for a price to free cash flow of about 7.12. At face value, looks incredibly cheap. I mean, that's a free cash flow yield of 14% on a business that's growing its revenue super quick and it's growing its cash flow. Now, in my opinion, why the market is valuing this stock not that high right now is because it has so much debt and because it has that negative tangible book value and it's taking on debt to continue growing and acquiring businesses. Yes, it's growing super well. But again, when you go over to our stock unlock insights right here, you got to really pay attention to this business's financial health. And that is how it is growing, is it's taking on debt. It's leveraging up the balance sheet essentially. So then my question becomes, how long can they do that? And what is their plan going forward for growth? Is it going to be organic or are they just going to continue acquiring forever? So in my opinion, that's why the company is selling for a low free cash flow, price to free cash flow, and has that large free cash flow yield. Although I will admit, a 14% free cash flow yield is very, very, very attractive. So this one is on the watch list. Only 7 people on stock unlock are watching it so far. This is a business that I'm probably going to really pay attention to because it just looks super interesting and that free cash flow yield is really enticing me. Let's move on to the 5th and final stock. And this is a very small market cap company, okay? Only $14.4 million. I'm going to say this right off the bat. I am not going to be buying this stock and I'm not even going to think about buying this stock. I just think that it's a very good example here as to a business that looks very attractive, but still I wouldn't be buying it, okay? So right away, let's compare the returns of this stock versus the SPY over the past decade. And it has been outperforming the SPY. It's up now about 481% versus the SPY's 204% over the past decade. So it's a small market cap. It's outperforming the S&P 500. It's in the biotech industry, which personally I don't understand at all. So right away, knowing it's in the biotech industry, I wouldn't be buying it. Basically, the biotech industry is way outside of my circle of competence, so no thank you. Now, we can see the free cash flow yield is 20.6% though, okay? So this company is generating a lot of free cash flow and it has a very high stock unlock insight score. So let's go and take a look at the insights and we can see that it's very profitable right now with a profitability score of 4.4. The free cash flow margin is 41%, gross margin 66%, net margin 23%, and operating margin 24%. These are very nice margins. If we take a look at the growth, book value is growing, free cash flow is growing, gross profits are growing, net income is growing, operating cash flow is growing, operating income is growing, revenue is increasing by 30%, and tangible book value is growing. So this business's fundamentals are growing super, super well. The financial health is also awesome. They have more cash than total liabilities. Their current ratio is 5.7 and their debt to EBITDA ratio is only 0.5. So it's got a very strong balance sheet. It's growing super quick and it's very profitable and it's only worth $14 million. Now, another very interesting thing about this stock is if we head over to the balance sheet, we can see right here that it has cash of $7 million, okay? And if we scroll down, it has liabilities of $2.4 million. So as we saw on the insights, it has more cash than total liabilities. Now also, if we scroll down to the shareholder equity or the book value is $9.7 million. This is a $14 million market cap company, so it's selling at about 1.5 times book while the business is growing. If we take a look at the revenue in the trailing 12 months, we can see that the revenue is growing right now and hitting an all-time high. And if we take a look at the cash flow is growing. And in the trailing 12 months, they did $3.2 million in operating cash flow. So it's generating a ton of cash. It's cash rich. The balance sheet is awesome. But the reason I'm not buying this stock again is because I don't understand the biotech industry. It's an incredibly small market cap. And I went and took a look at this company's SEC filings, and they essentially provide medicine for COVID patients. So with COVID taking off and a lot of people entering the hospitals, this company's products were in very high demand. So they saw that revenue growth, they saw that cash flow growth, and they saw a growth to the overall business's fundamentals. But the CEO themselves, in their most recent SEC filing, in their most recent quarterly report, basically said that they don't expect this level of fundamental performance and growth to remain. They actually said that they're expecting the revenue to drop over the next few years because COVID isn't as much of a problem, and you know, people are just getting general immunity to COVID from it spreading around. This is a business right here. Why I wanted to bring it up is because its fundamentals look super, super attractive. But when you take a look at what the CEO says about the business in the future, it doesn't look that attractive anymore, because they basically said the fundamentals are going to decline over the next few years. But anyways, it's got a very nice stock unlock insight score of 4.62 out of 5. As we just saw, the fundamentals look pretty incredible, but it's outside of my circle of competence, and I don't know if this business is going to continue growing over the long term. So it's one that I will not buy. Yeah, that's going to wrap up the 5 stocks that I found. Again, you guys can go and check out my Daniel Pronk screener finds. I'm going to share this right now. I'm actually going to make this a public watch list in the video. And now you guys, I'm going to put this link right here in the description of this video. You guys can click that link and you can come and check out this watch list of 16 stocks so far that our screener has picked up that I do think look interesting at face value, so that you guys can go and take a look at them, maybe research them a little bit more, and see why Stock Unlock is grading these stocks so highly. Yeah, just know that we are working on a screener. It is in progress. I don't know when it's going to be done, but it's already working, and it's already finding stocks with very attractive fundamentals and some really interesting stocks, honestly. So go and check out those stocks, add them to your watch list, maybe do some research on them. And yeah, just know that the screener is coming, and I'm super stoked that it's going to be out soon. Also, if you're not a member of Stock Unlock already, you can get a 14-day free trial for totally free. You don't even need a credit card, and you can get access to all of our features and all of our Stock Unlock insights, and come and play around with the platform. It's honestly the best platform for fundamental long-term investors and for anyone who truly wants to improve their own investing. If you use Stock Unlock, I can guarantee you're going to become a better investor and find better stocks and avoid all those hype stocks and bad stocks in your portfolio. So come and check out Stock Unlock, get your 14-day free trial. If you enjoyed the video, please remember to leave a like on it. I really appreciate it, and it helps our channel grow. And also, if you want to see more content like this and stay up to date with our platform and the markets, then subscribe to the channel as well, because that would be awesome. But thank you all so much for watching. I truly do appreciate it, and I really hope to see you all again in our next video.